Got it. My second question is with regards to the other income. Now, other income continues to be elevated on the back of your IPO proceeds being unutilized. So, how do we see this evolving over the current fiscal, the utilization of funds, and how do we see the other income panning out over the next couple of quarters?
Yeah. So Hardik, it is like this. See, obviously we had objects specified for the this thing, QIP. So since the approval was pending and now it's about to happen, so this year obviously we utilize a lot of capex and so on. This capex is planned over 2 to 3 years time frame. To that extent, proportionately we'll consume this capex, and obviously these and all these things will get converted into equipment. So from that perspective, your other income. But anyway, the EBITDA that we talk about, operational EBITDA, is excluding the other income, the 13.3%. Just wanted to bring that to your notice.
Okay. Thank you so much. I'll get back in the queue.
Thank you, Aditya.
Thank you. Our next question is from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
Sir, good afternoon and thank you for the opportunity. Congratulations on a great set of numbers. So my first question is regarding your capex guidance. Is there any change to that FY25-26 capex?
Yeah. So as we had declared earlier, so we have new capexes, one in the OSAT business, the other in the PC board business. So it remains exactly similar to what we had planned earlier. It is just that the implementation timeline got delayed by a couple of months because of the election and election results and all that. Otherwise, the capex plan exactly remains the same because there are a lot of back work to be done before we can make any changes. So these are the two priority projects with us. One is OSAT, the other one is the PC board project. And obviously, we still have some small amount left in the IPO proceeds to complete our capex implementation in Chamarajanagar and Mysore and Manesar plants.
Understood. So my second question is on OSAT. I understand that you are awaiting the final approvals from the government side. But when you start the operations, what kind of revenues/EBITDA incremental to your core business do you expect from FY26?
Yeah. So see, all I can tell you at this point in time is it will be margin accretive to the existing business. Now, exactly what will depend on exactly what orders we receive. And though we have broad MOUs with 4 customers and so on and so forth, we still have to show them a plant before they can assign a particular product category to us. So more details shortly. Maybe you have to give us a couple of quarters more when we start doing the POC. So at that point in time, we can more. But all I can say is it will be margin accretive eventually compared to the EMS business.
Sir, any sense on the incremental revenues?
Incremental revenues typically in this business, the asset turnover is about 1 to 1. Let's say 2 or 1, in the best case scenario 1.3 or so. So depending on the capexes and the increase in the capacity utilization, we can compute that, and let's say FY30 we would have done all of this 3,000 crores of capex in OSAT. So we should definitely have revenues in excess of 3,000 crores, maybe 20% more than that, maybe 3,000, 3,500 crores by FY30.
Understood, sir.
And we would have finished it. Yeah.
Sure. That's all from my side. Thank you.
Thank you, Sonali.
Thank you. Our next question is from the line of Kaushik Mohan from Ashika Institutional Equities. Please go ahead.
Hi, sir. Morning. Sir, I just wanted to understand your OSAT business. In one of the interviews, I think one of your managers told that in coming days, like we can see a separate listing for OSAT. And can I understand on the broader terms how large this OSAT business can be and how are we geared up for entire thing?
Hi, Kaushik ji. Nice hearing your voice. See, the thing is, as a company, we have not decided about any listing, etc. So our stand is very simple. Kaynes Technology is the holding company and all other subsidiaries results get consolidated into it. As far as business is concerned, the OSAT business takes anywhere between 2 to 5 years for it to start yielding, let's say 80% capacity utilizations and so on. So like I said, our OSAT capex is about 3,000 crores. So by FY30, we can expect about 3,500 crores revenues in this. And my estimate is that the margins will be better than our existing business. But exactly what depends on what kind of products we onboard, and that would depend on customers' decision as to what range of products they want to do with us. But our target is that 25% of business will be in legacy area, legacy semicon assembly area. 75% business we want to do it in the advanced packaging area. So looks like this target is achievable. But the only thing is you got to give it time for implementation of the first POC line and then do the other few approvals from customers and so on and so on.
Got it. Thanks, sir. And sir, my second question follows is on, we have spoken about touching $1 billion on top line by FY28 as a target. So do we have any contribution of OSAC in these numbers, or this is a separate number?
No, this is consolidated number. 1 billion is including OSAT and PC board.
Okay. So approximately what can be the OSAT contribution in this? Any backup calculation?
So this is just an estimate at this point in time. Like I said, in OSAT depends on. We definitely will do consolidated 1 billion, which is like anywhere between 8,500 to 9,000 crore kind of number, depending on what the exchange rate is likely to be at that point in time. I would say bulk of the sales will be from the EMS business only. So it can be close to about 70-75% will be EMS business at the minimum, and the remaining will be new businesses like OSAT and PC board.
Got it. And how about our capacity utilizations in the current plant, sir?
So the capacity utilization typically goes through a cycle of low, let's say 40-50%, and then it peaks at about 80-90% when we onboard capacity. So currently, with the new plant coming up in Hyderabad, so we will have probably capacity utilization reasonably under control. But by the end of the year, we think we will reach more like 80-90% capacity, 80% capacity utilization, maybe 70-80%. And then, of course, first quarter we have to augment capacities. The Chamarajanagar facilities, Gamma building will come up. We are also having plants in Pune and up north in Jammu. So those capacities will also fire up. So hopefully we will be able to manage this. So end of the year we will have maybe 70% utilization, and then of course we will have to add fresh capacities to cater to the additional business for the next year.
And sir, how about our smart meter business? How big is this opportunity? Because now I see that government is very cautious on not losing the electricity, and also there are a lot of reports telling that the focus is going on to hydrogen side to create electricity and different forms of electricity. Like it might be rooftop solar, or it might be wind energy or anything. So and smart meters plays a very big vital role on this play. So can I understand where are we getting the clients and what is this entire division will look like?
See, in the smart meter space, broadly out of 250 million units that were planned to be implemented, about 10 million units have been already implemented. So it's a very large, let's say, use case that has been done. And of course, there were a few queries here and there. Some users said no, etc. Obviously, when you put 1 crore meters, there will be at least a few thousands of people who will protest, etc. But broadly, the information from our customers is that this entire thing is working, system is working, and so another 240 million meters at the minimum will be there. Then of course we are also it's a similar technology, so we do have access to customers who would be also looking at other metering, whether it's water, whether it's gas, and so on and so forth. So it's an exciting area. So with a good let's say a business horizon for next at least 5 to 10 years time frame, So 240 million, you can put roughly whatever is the kind of price of a meter, anywhere between 2,000 to 5,000 rupees, depending on the single phase or 3 phase, etc. So it's a large amount of business that is coming in, and with government's Atmanirbhar plan, they are promoting only India design, India made products, and there is also a good export possibilities in this area.
So how much money are we locking up for this business in our balance sheet?
This is an EMS kind of this thing. Obviously, there's an additional capex for plastics, etc., but nothing significant. This also has an asset turns of anywhere between 6 to 8, and maybe nearer to 8 because this will be a product-focused activity. So it's a very, it is probably less asset intensive than our existing business itself.
Got it. So how about the competition? Because the competition is also very strong in this business, right? Is it sustainable with that internal targets of 15% margin that we speak about?
Yes, sir. So two of the best service solution and service providers are our customers in this area. So we think that we will have a significant and steady market share. So these are proven solution providers across the world. They are global players who are working in India. So we are confident that at least to the extent that we do the business, it will be a stable business.
Sure. Thanks, sir. Thanks, sir. I'll get back in the queue. It was helpful.
Thank you.
Thank you. Our next question is from the line of Indrajit Agrawal from CLSA. Please go ahead.
Hi, thank you for the opportunity. A couple of questions. First, on the subsidy on OSAT, right? So I just want to understand how does it work? Is it like the government spends like for like, or you spend majority of in the government then reimburses at a later date?
Yeah, so there are two subsidies in OSAT. So one is central government subsidy. The second is state government subsidy. Both are in the nature of cash subsidies. They are not in kind, okay? That's the first thing. The second thing is both are linked to a certain class of, let's say, total class of investment. Maybe the land is excluded from it. Land, we get a special subsidy separately from the state governments. If we are approved OSAT land, they give us 50% off on the land. As far as the remaining capex is concerned, that is the total capex minus the land, they give us, central government gives us 50% subsidy. The 50% subsidy is issued on a pari passu basis. That would mean that the moment company invests, let's say, X amount of rupees, the government also provides the same amount of rupees, and this can be then used to purchase capex. So this is pari passu. As far as state government is concerned, similar method works, but the only thing is they await the commencement of operations. That means, which would mean that at least the first couple of lines have to be operational and the company has to start doing some invoicing. So we have taken a period of 2 years for this purpose, like let's say FY26, but we are confident that much before that we will probably start doing it, that we start enjoying the state government subsidy. State government subsidy is anywhere between 20 and 25% of the total capex. And this is contingent on getting approval from the central government subsidy.
Sure. And there is no tax implication of this, right? So this is all independent of the tax output.
There is no implication of this of government subsidy. No, there's no implication of tax in this.
Sure.
The only thing is that they want us to work for a period of 5 years, make sure that the assets are productive and we start doing business and we onboard some good technology which then the government can talk about and so on. So they have been actually very supportive in this and helping us. They are also giving us some contacts, etc., to improve our program.
Sure, this is helpful. And second question is on Kavach. So, understand the proof of concept is still to be done, but ultimately your contract will not be with the government, right? It will be with an EPC player who will have a contract and you will have subcontractors. Is that correct? Or you can directly contract with the government?
Yeah. So while we have not worked out the actual modality, but see, typically all railway contracts, they said development and manufacturing, okay? They don't really, so the key to supply to somebody like railways is an approval from their side. So what we are doing is we are working with the technology provider and making a cost-effective solution for Kavach and getting it approved by RDSO. There are two options there. One, of course, we can directly supply, or the other is through other OEMs. We have all the key OEMs already working with us. And the third option is somebody else's Kavach design also we can manufacture. So we do have RFQs in all the three areas. So maybe the first step for us is to demonstrate that we have a Kavach product, which we will do, like Ramesh said in his opening remarks, we will do probably by the end of this year or early next year. And uske baad then we will do this business split between these three different methods,
So are your existing railway contractors or customers the same as the Kavach customers, or there will be different set of customers or the OEM?
They will be similar, sir. They will be similar because the railway ecosystem is such that the tenders are picked up by implementation contractors who have trained staff. So they align with one of the big major OEMs, in signaling system. And these are the very same people who will actually implement probably the Kavach program also. So it will be the same ecosystem.
Sure. Thank you. This is helpful. That's all from my side and all that.
Thank you. Thank you so much, Indrajit.
Thank you. Our next question is from the line of Karan Sanwal from Niveshays. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah, so wanted to understand, from the products that you manufacture, what would be the major components in terms of, percentage value, which is sourced from the domestic market currently, like bare PCBs, transformers, resistors. If you could highlight the major components.
So you're talking about, currently you're talking about our existing EMS business, correct?
Yes, yes.
So basically in existing the EMS business, if you say roughly 60% of the entire materials are generally imported, 40% is locally manufactured.
Okay. And what will be the major components in those 40%?
So currently, what I was...
Where did we get dropped?
No, I will repeat.
Okay.
Yeah, so you were asking about the import from EMS business, and I was explaining some of the things like PC board will get indigenized, and some of the OSAT also will probably source will become India, but again continue to be imported because it will go to the global supply chain with warehouses outside of India. And so roughly about 60% is imported. Out of that, maybe 10% of sales will probably get indigenized into India, and the remaining 50 will continue to be imported from outside of India.
Okay. And also, if you could state the gross debt level and the average interest cost for the as on date.
I didn't get your question, sir. Can you just repeat it slowly?
Yeah, I was asking for gross debt level and the average interest cost.
Oh, okay. Gross debt level. So this is like I said, this is a temporary thing. We do have little bit of increase in inventories, and also couple of customers, there was a delay in payments. But we have now figured out how to get that organized. So going forward, that will come down.
Okay. That's it from my side. Thank you.
Thank you, Karanji. Thank you.
Thank you. Our next question is from the line of Rajesh Vora from Genuine Ventures. Please go ahead.
Good afternoon, gentlemen. Congrats on strong first quarter. Ramesh, the US $1 billion revenue aspirational target coming nearer, when are we expecting that to hit?
Yeah, Rajesh, thank you for joining this call, especially on a Saturday. So this $1 billion is our aspirational target as of FY28, sir. And like I said, I was explaining, the 75%, 75 to 80% will be our existing EMS business. The remaining will be augmented by new businesses in OSAT as well as the PC board area.
At that level, Jairamji, it would be, margin would be higher than where we are today, right? Because as you stated, OSAT and PCB will have a higher margin.
Yes, sir. By that point, we would have probably worked on the high density interconnection boards and also the advanced packaging. So we are expecting the new businesses to be value accretive and margin accretive also. So you are right. It will be the total consolidated numbers should have higher margins than just the EMS business.
Right. And my second question is, I remember discussing with you and Ramesh about Danaher Corp, which is, I believe, one of your customers. And it has a very good basket of products on the medical devices side. And they've done very well over the years on acquisition side as well. So are we emulating anything from that company or another EMS company?
Sir, you asked about whether we are getting some business from this medical devices company that we have onboarded as a client. Is that the question, sir?
No, I'm saying Danaher Corp. Is that one of your clients?
Danaher is our client.
Yeah, one of their subsidiaries is a client of ours. And yes, we are seeing some little uptake in this, but too early to declare victory, sir. But we are qualified by the Danaher Group company. So as and when their outsourcing spend increases, we will be the beneficiaries.
Yeah, and my second part of the question, Jairamji, was about are we benchmarking our company on any other global EMS or companies like Danaher or any that we should be about?
Yes, sir. So in terms of benchmarking, sir, we have an internal process of what we call best in class. That means in terms of product portfolio, we should be like somebody like without prejudice, I would say somebody like a Plexus Corporation, right? They have very cool products, full built products they make, etc. In terms of margins, we should be like some of the smaller organizations which do EMS across the world in aerospace and all that, which are high margin and protected markets. When I say protected markets, they are niche players who are very difficult to replace. They have developed intrinsic technology. So we conceive us to be an integrated EMS player with doing some technology, high-tech products, doing complete value chain for the customer, which would include, of course, box build. And in certain set of our customers who would like to do the what you call the silicon assembly also through our OSAT. And we would also like to do the PC board, which is especially the high-density PC board, so that we become a preferred supplier of people seeking highly complex and highly technology-oriented products, which we believe that the entire electronic assembly is moving in that direction. So in future, you would see two different types of electronic. One will be this commercial electronic that will also be high-tech, but that will be high volume. We may not be getting there, the commercial and consumer kind of thing. The other is industrial type of thing, which will be high-tech. So we think that we will be a good supplier of this high-tech, and the volumes may not be necessarily high, but they'll be all complex and critical products with new generation of silicon, etc., where in some cases we'll get some opportunity for silicon assembly also.
Lovely. Makes sense, Jairamji. Thank you very much and wish you all the very best for $1 billion target. Thank you.
Thank you, Rajesh. Thank you so much.
Thank you. Our next question is from the line of Nikhil Kale from Invesco. Please go ahead.
Yeah, hi. Good afternoon, everyone. Thank you for the opportunity. Congrats on a very good set of numbers. Jairam, the first question was on the PCB business. So like you highlighted on the OSAT, we are looking at maybe like a 3,500 odd crore kind of a target for FY30. What could be the potential top line that we can achieve on the PCB bareboard business? If you could just maybe talk about that.
Yeah, Nikhil, thank you for this question. So the PC board, originally we said phase one maybe will do about 730 crores, but we are now working with state governments to get a little higher subsidy too. So eventually by FY30, I think we would probably have a capex of about excess of 1,200 to 1,400 crores. So here also you can expect a top line of anywhere between, depending on capacity utilization, anywhere between 1,000 to 1,500 crores by FY30. So this will be roughly 40% of the business of OSAT itself. OSAT will be, let's say, anywhere between 3,000 to 3,500 crores. This will be about 1,000 to 1,500 crores by FY30.
Okay. Got it. So by FY30, broadly 4,500, 5,000 odd crore from the new businesses, and safe to say that the PAT margins on these businesses would be similar, maybe would be better than the legacy.
It will be higher than our US business. Yeah.
Got it. And just second question was on the order book. I think at the start of the call you mentioned that there are some new orders that you've got where the execution time frame is slightly higher. You talked about a 10% kind of a number. So just wanted to clarify this. So out of 5,000 odd crore, broadly maybe 500, 600 odd crore is something which will get executed over 2 years, and the remaining will get executed over the next 12 to 15 months. Is this understanding correct?
Not really. What I'm saying is, I was talking about the orders added. So I was trying to explain the sudden increase. I think the question was sudden increase in the order inflow. So what does it mean? Does it mean that this year we'll do beyond 3,000? I was trying to explain that those order inflows are pertaining to some executions which are not in this year. But broadly, 60 to 70% of the order book gets typically executed in the year. So you can take anywhere, let's say 5,000 crore is the order book at the end of June. So 70% of that is 60% of that is about 3,000. We already done 500. So obviously we have good coverage. In fact, there will be a challenge in terms of actually completing the entire thing because of capacity and all related things. So roughly about 60% at any given point in time for the next 60 to 70% for the next 12 months kind of time frame. So yeah, so obviously most of the orders that we'll execute this year are already there with us. Some customers who give 6 months to a year order, they will keep coming in. And yeah, so we will try and make sure that we satisfy the customer with this possible extent.
Okay, got it. And just last question on the working capital cycle. I think in the past we've spoken about that we are in discussions with our vendors to maybe set up warehouses in India or maybe to suppliers from local kind of regions. So any progress on that? Because I mean the way the order book has been ramping up, we'll constantly be in this phase wherein we'll have to kind of order more inventory for our future orders. So then how do you kind of look at working capital kind of coming down? So these initiatives will be important, right?
Yeah. So the nearshoring of inventory is one activity. We couldn't do too much progress last 3 months because I think everybody was watching the budget and provisions for providing some benefit in that area. We expect another couple of months time government will also initiate some policies on logistics. So it will make it easier for people to nearshore inventory. On the other hand, just based on our own stream, we have got positive response from most of the suppliers. So we'll try and do something this year where the locally people keep some stocks for us to relieve some of the burden. So we are working in the direction. More on it maybe by Q3 or so. The remaining improvements that we do in this thing will be based on efficiency improvements and also making sure that shortages are not there and so on, and also working in factoring agencies for making sure that receivables are under control.
Okay. Thank you. Thank you so much.
Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question for the day. I now end the conference over to management for closing comments.
Go
ahead. So are there any more questions?
No, last question.
It's complete.
Thank you.
Yes, sir.
All right. Thank you very much for attending this
Thank you.
On a Saturday. We appreciate the interest shown. Probably one of the best attendance on a holiday for a earnings call. And next time around, we'll keep it on a working day so that we don't inconvenience you too much. Thank you so much. Bye-bye.
Thank you.
Thank you. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.